But what caused the financial success was not extreme ability. You know, I have a good mind, but I'm way short of prodigy. And I've had results in life that are prodigious. And that came from tricks. I just learned a few basic tricks from people like my grandfather.
What were those tricks?
What kind of... Now everybody's leaning in, wanting to know.
Charlie Munger has often said that the vast majority of his financial success has come not from superior intelligence or insight, but from a framework of mental tricks and models that have helped him avoid just making bad mistakes. And by applying those mental tricks in the realm of stock market investing, he's been able to accumulate a net worth of $2.4 billion and will go down as one of the best investors and best thinkers to have ever lived. So in this video, I'm going to explain 5 mental tricks that Charlie described in his 2020 interview that have helped his decision making and his investing throughout his lifetime. And it starts with the very powerful trick of inverting the problems you have to solve.
There are all kinds of tricks that I just got into by accident in life. One, I invert all the time. I was a weather forecaster when I was in the Air Corps. And how did I handle my new assignment? Being a weather forecaster in the Air Corps is a lot like being a doctor that reads x-rays. It's a pretty solitary. Yeah. You're in the hangar in the middle of the night and drawing weather maps and you're clearing pilots, but you're not interfacing with a bunch of your fellow men very much. And so I figured out the minute I was actually making weather forecasts for real pilots, I said, how can I kill these pilots? Now that's not the question that most people would ask, but I want to know what the easiest way to kill them would be so I could avoid it. And so I thought it through in reverse that way, and I finally figured out, I said, there are only 2 ways I'm ever going to, I was in the ferry command, there are only 2 ways I'm going to kill a pilot. He said, I'm going to get him at icing his plane can't handle, and that will kill him, or I'm going to get him someplace where he's going to run out of gas before he can land because all the airports are sucked in. And I just was fanatic about avoiding those 2 hazards. My grandfather would say to me when I'm swimming, he'd say, swim as long as you want, but stay near the shore. But you can laugh, but no, he was a very wise man.
Yeah, exactly. Yeah.
Well, what I'm hearing you say is that you, as a discipline, look at what the risk is on the other side of the situation and you avoid that. That's one of the rules, right?
Well, it's just that it's like a lot of practical problems in algebra. If you invert, you can solve it easily. If you don't, you can't solve it easily.
Exactly right.
And so, of course, I had that trick very early. And most people, they say, how can you, please tell us what you do to save India? And of course, I would approach it differently. I'd say, what could I do which would most easily hurt India? And approaching it in reverse that way, I got better results.
You look at the vulnerabilities.
Yeah, yes, and I have a whole bag of tricks like that.
So while Charlie describes how he applied this to his work as a meteorologist, inversion is also a very powerful concept in the stock market. People are very good at finding stocks they think could be a winner, but of course that's only half the story. The other half of the investing equation is to ensure the company you're looking at won't be a loser. You know, Buffett's first rule of investing, after all, is don't lose money. So while it's necessary to ask, why will this stock do well in the future? Remember, it's equally as important to ask, why might this stock do poorly? And oftentimes, asking the latter will do much more for your long-term returns than anything else. So, you know, next time you hear someone talking negatively about a stock that you own, don't argue with them. Instead, thank them for bringing the inverted perspective to your attention. So inversion is key, but another mental model Charlie talks about is the concept of humility, or knowing what you don't know.
But if humility means that you know the edge of your own competency,
Yes.
and you aren't arrogantly stepping over the boundary, I'm very good at that.
Yeah, well, I'd redefine humility as knowing what you don't know.
Yes, well, both Warren and I are very good at that. One of these guys at the Berkshire meeting from one of the foreign publications said, why do a couple of guys in a little place in Omaha do so much better than all these powerful minds in great institutions. And I said, well, I think Warren and I know the edge of our competency better than other people do. Warren frequently says, I'd rather deal with a guy with an IQ of 130 who thinks it's 125 than a guy with an IQ of 180 that thinks it's 200. That second guy will kill you.
So this discussion revolves around a core philosophy of investing, which is the circle of competence. In investing, you don't need to know about a lot of things. You just need to know a few things very well. And this is another mental trick to avoiding bad investments. Know the limit of your competency to be able to understand when you're drifting into areas that you don't know. And then once you can understand what's inside your circle and what's outside your circle, don't be afraid to double down and go deep on learning about the areas of business that do fall firmly within your circle of competence.
Specialization is the safest way up for most people. And for that reason, say surgeons know more and more about less and less, and that's what gets rewarded. And if you have a nasty fistula in your colon, you do not want a surgeon who's good at Proust or political science. It's understandable how the world rewards this specialization. I never liked it, and I loved picking up new ideas, being a great, passionate reader. And so I decided I'd make whatever living I could make doing what I like to do, which is sort of romping over a whole field. I do not recommend it to other people because the safe way up is to know a hell of a lot about something.
So while Charlie Munger doesn't himself like to specialize, he acknowledges that it's the smart thing to do. Now, here he was talking about specializing in, a certain career, but of course this applies to investing as well. Warren Buffett, he understands insurance very well. Ray Dalio understands macroeconomics very well. Charlie Munger understands China very well. Benjamin Graham understood distressed businesses very well. Jack Bogle understood long-term market patterns very well. All of these guys knew a lot about a little, not a little about a lot. For example, the people on CNBC are people that understand a little about a lot. But when they do want to go deep on a particular issue, then they bring in a big investor that specializes in that area. So definitely make sure you know your circle of competence and don't be afraid to go deep on things you already understand reasonably well. So that's trick 2. Then from here, the third trick Charlie talks about in this interview is to be rational enough to be unaffected by wild swings in the stock market.
Well, I am continuously invested in American equity, but I've had my Berkshire stock decline by 50% 3 times. And it doesn't bother me that much. I regard that as just a natural consequence of adult life properly lived. So if you have my attitude, it doesn't really matter. I always like Kipling's expression in that poem called If, and he said, success and failure, he says, treat those 2 imposters just the same. You just roll with it. Sometimes it's going for you and some against, and it's all part of the same game.
This might be one of the most powerful philosophies that Charlie has, the ability to stay focused on the long term and not have a knee-jerk reaction when the market starts swinging wildly. And this is something he's always been very passionate about. Let's rewind the clock to this old interview he did with the BBC.
How worried are you by the declines in the share price of Berkshire Hathaway, the difficulties the company's in?
This is the 3rd time that Warren and I have seen our holdings in Berkshire go down top tick to bottom tick by 50%. I think it's in the nature of long-term shareholding with the normal vicissitudes in worldly outcomes and in markets that the long-term holder has his quoted value of his stock go down and then by, say, 50%. In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50% 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
There you go. If you're not prepared to tough it out through periods where your portfolio is down 50%, just do yourself a favor and never buy into the market, because it will happen to you at some point and you won't be able to see it coming. And when it does hit, you need to be able to stay focused on the long term and not panic. You panic, you lose. So always stay rational and just ignore those sudden market swings. Then moving on to Charlie's fourth trick, it's to always keep things simple and moreover ensure the companies you look into are solid, straightforward businesses that anyone could run.
We have a very peculiar way of looking at things. We want to buy something that's intrinsically a very good business, meaning that an idiot could run it and it would do all right. And then we want that business, which an idiot could run successfully, to have a wonderful person in it running it. And if we have a wonderful business with a wonderful person running it, that really turns us on, and it works very well. And now we do make exceptions, but not many. And it's a pretty simple philosophy. Warren sometimes says you have to choose good person or good business. You know what he says? This is not politically correct. He says good business. He wants something that has such tremendous strength. I had a friend when I practiced law, and he said, if it won't stand a little mismanagement, it's not much of a business. And we like businesses that stand a lot of mismanagement but don't get it. So that's our formula. And we can't make it work perfectly, but it certainly worked better than most people's.
So ideally you want a wonderful business and a wonderful person running it, but the most important thing is that the business is solid and straightforward and it's got a big competitive advantage. You know, as Charlie said, if it won't stand a bit of mismanagement, then it isn't much of a business. So even though we like businesses that are well managed, above all else, finding a straightforward, strong business that anyone could run is definitely the top priority. And then finally, Charlie's fifth trick that helped him do very well in investing is a simple one. It's to read a lot. Take a listen.
By the way, don't you read a book a day, something like that? You told me.
Well,
Maybe not.
I read and I skim a lot.
Yeah.
I do the accidents of life. People give me books. I am in a torrent of books, and perfect strangers give me books.
Yeah.
Lots of them. And I almost never buy a book anymore. When I was young, I used to order them from the book review columns of the New York Times. And now that it's torrent of books comes in, I just select what I want. And I'm amazed at how well some of these people are reading me. I don't think you can take every bookish little boy and turn him into a billionaire by patting him on the head and say, read all you want, Johnny. But if it were that easy, there'd be more billionaires. But it enormously helped me. And I think reading, once you've learned it, reading and arithmetic, you can take in so much, and you can take it in on your own time schedule. If somebody's talking to you, he may be telling you something you don't want to know, you already know, it's too hard, or he's going too fast or too slow. Yeah. But when you're reading, you can just take it as you want it. So it's just God's gift. If you're into self-education, there's nothing like reading. And of course, people who do a lot of it have an enormous advantage.
So Charlie is a big fan of reading, as is Warren Buffett. But beyond the general tip of reading, I think self-education is really the trick that Charlie is getting at. You know, it's a shame, but most people finish their uni degree and they think that their learning is done. They'll just go out and work their job for the rest of their lives. You know, school's out, hooray, we've done it. But all of the most successful people in the world are the ones that make self-education and self-improvement a focus throughout their whole life, you know? And it doesn't necessarily have to be books. It could be courses or podcasts, audiobooks or interviews or whatever really. But if you do take the time to improve your own abilities and your own earning power, as Charlie says, that will serve you tremendously well in life. Having an innate interest in self-improvement. That's Charlie's last trick. And he practices what he preaches. He's 98 years old and he's still putting in the effort to read a lot and gain perspective. So overall, they are 5 of Charlie's mental tricks that helped him become not only one of the best investors in the world, but also one of the best minds, full stop. So anyway, guys, I hope you enjoyed the video. Make sure you leave a like on it if you did find it useful, or if you enjoyed it, subscribe to the channel if you want to learn more about value investing. People like Charlie Munger and Warren Buffett, all those guys that preach the value investing, the rational value investing approach. Make sure you're subscribed. If you're interested in more new money content, you can check out New Money Clips, links down in the description below. Thanks always to the Patreon producers for supporting the channel. But guys, that will just about do us for today. Thank you very much for watching, and I'll see you all in the next video. This video is brought to you by Sharesight. Sick of tracking your performance manually? Track capital gains, dividends, and currency fluctuations easily, and when it comes to tax time, have everything you need ready to go with just a click of a button. Try Sharesight for free, or use the referral link in the description to get 4 months free when you sign up to an annual plan.